Hello and welcome to the show that debates and the hottest issues of the day. This is The Big Picture and I'm Athar Khan. As part of the run-up to the budget, Rajya Sabha Television will bring you extensive coverage of not just the budget but also the economic survey that comes out on the 15th. And since there are just 3 days for the big day, we look at the growth scenario in the country. Growth has slipped consistently since the 2008 recession, and from 9% GDP growth, the latest projections for the next fiscal is 6.9% or thereabouts. There is no doubt that the Finance Minister, Pranab Mukherjee, has an arduous task on his hand. On one hand, he has to revive growth and bring back investor confidence by announcing some tough measures that are expected from him in this budget. Economic reforms like FDI in retail, the land acquisition bill and many others have been stalled due to a lack of consensus between political parties. Tax reforms like GST and DTC are still a long way from implementation. Tonight on The Big Picture, we discuss what the Finance Minister must focus on to revive growth and bring back investment and sustain both in the long run. We'll discuss the state of the economy and try and zero in on what the top priorities are for the Finance Minister in the run-up to the budget. And joining me in the studio today is Dinesh Narayanan, Senior Editor of Forbes India magazine, Dr. Anjan Roy, the former Chief of the Economic Cell at FICCI, currently an analyst with ASSOCHAM, and Dr. Kamta Prasad, eminent economist. I'd like to start the show, if I could, with you, Anjan Roy. Since the Congress party came to power, UPA too came to power, foreign investors and companies, India Inc., so to say, has been waiting for some tough measures, some tough reforms, so that investor confidence returns. They're still waiting. How far do you think the Finance Minister in this budget can stretch his political compulsions and walk that tightrope, between involving everyone, keeping his political compulsions in his sight, and also getting some tough economic measures through?
It is not as if investor confidence was not there. Investment rate was good. You have to see that after the 2007-8 crisis, economy had revived, and last year FDI also improved substantially. But what happened is that inflation had played the spoil sport, because as inflationary prices were rising, RBI moved in with contractionary monetary policy. I mean, over 2 years, it raised.
I think it was March 2010 to October 2011.
Right.
Yeah.
Now, that acted as a brake on investment. As we can see, even the Prime Minister's Economic Advisory Council has pointed out, investment rate in the economy has fallen drastically from 33 point something to just about 30%. Savings also has gone down equally. Now, these are structural factors which determine the growth of an economy, and the Finance Minister will have to take some steps at least. You can't change these overnight, but he has to initiate steps which will bring about some change in this. But for that, budget alone is not enough. We have to have a lower interest rate regime. Besides, we have to have much better ease of doing business.
It's interesting, Mr. Roy, that you mentioned the interest rates and the rate cycle. We'll talk about that a little later in the show. But coming to you, Dinesh, most people do not expect tougher structural reforms like, say, FDI in retail or even the land acquisition bill, for that matter, to come through in this budget. Do you agree with that, first of all?
Well, I frankly don't know if it will come through in this budget.
But what is your feeling as a watcher, as a journalist?
See, there are two options before the Finance Minister. Either he can go the whole hog and introduce all the reforms which are needed for the economy, or he can play, be subservient to the political compulsions and not do any of them at all. It will all depend on him.
But you don't see him going either way as of now. It's too early to call.
It's too early to call.
It's too early to call.
Yes.
Fair point. Dr. Kamta Prasad, coming to you and asking you this. Like Mr. Roy mentioned, the rate cycle obviously had an effect. It was used as a monetary tool to combat inflation. Do you think that it worked completely the way that RBI and the government had hoped it would?
You see, it is a misnomer to say that well, rates are very high. You see, about the rate, there is something psychological feeling. Even rate is 4%, raise it to 4.5%, there is hue and cry from the industry rates is rising psychological. If you read, have a knowledge of economics, you see that, well, there are two basic factors affecting investment. Rate of interest is one, but more important is the profit expectations of profit. That is more important, it is more volatile, and that determines things. And if you have to tackle that portion, the expectations of profit, and then we come to certain basic factors, fundamental factors, who touch that rather than superficial things like rate of interest and so on. Economy has been growing, even at high rates of interest. Economy have not been growing at a very low rate of interest in different parts of the world, including India. There is, we would see the correlation chart. So the data is not that important for investment. Important thing is profit expectation. So basic factors. For example, development of infrastructure bottlenecks are there, agriculture, irrigation. These are the real things that determine the growth of the economy.
Absolutely.
The
fair
saving
point.
rate,
Fair point.
the saving rate,
Dr.
the
Prasad,
capital
fair point.
formation.
We'll come back to agricultural reforms and infrastructure as well.
Yes.
Coming back to Mr. Roy first and asking him this now. Given the last 7 quarters, successive slippage of growth, last 7 quarters, the growth has slipped consistently. Did you expect India to do so badly, GDP growth-wise? Did you expect that at all?
See, as I mentioned, when you were introducing a contractionary monetary policy, I will disagree with him because interest rate plays a very crucial part. Interest rate influences not only interest rate now, but future interest rates. That plays a very crucial part because that affects your profit calculation expectations as well. Look at what happened. When interest rates were jacked up, housing demand will be affected because this is an interest sensitive area. Infrastructure investment will be affected because these are heavy investment oriented and long gestation period. So interest will have a very critical bearing on its viability. So that way one expected. See, why was the rate increased? To fight inflation. But our inflation, as we have seen, that inflation was due to shortages of specific commodities like food items. Now we have seen that these items were going up when interest rates were going up as well. It is so they were not interest sensitive.
Right.
What happened was, as a result, the cost structure went up and prices also went up. In the next cycle, this affected basic industries like mining, metals. Now, if you see even latest review of the economy of the PMEAC, you will see that the mining and metal sectors are slipping. They are in the negative. They are contracting actually, not growing. So these are factors which influenced and brought down the overall
Right.
growth.
Dinesh, do you think, given the latest numbers that have come in, I think the latest growth projection for the next fiscal is 6.9% now, coming from pre-2008, when it was touching 9 and 10 and somewhere thereabouts. Do you think slower growth is something India will have to live with for at least the next 2 to 3 years?
Not necessarily. It all depends upon the government. You see, the government, investors as well as industrialists, I don't think they are really looking at just an easier interest rate regime. That obviously helps them. But what they are looking from this government more than anything else is a clear direction in which the government would proceed, which is what has been lacking in the past 1 year. The government has not been very clear on what policies it would adopt. One of the rising concerns is the contract risk that India is facing, whether contracts will be enforced or not. Now, this was not a concern about 2 to 3 years ago, or say in 2008 when the world was going into recession. It was not so much of a concern as far as India was concerned. But now it is an increasing concern. And more than anything else, it's a direction which the industry is looking for. It's a direction which investors are looking for, as far as India is concerned.
Right. So hold that thought, Dinesh. We'll come back after a short break and we'll talk about the markets for a bit. Don't go anywhere. Lots to talk about on the big picture tonight. Stay with us. We'll be right back. Welcome back. You're still watching The Big Picture, and we're still discussing what the FM, the Finance Minister, Pranab Mukherjee, must do in order to revive growth and get investor confidence back to the country. Dinesh, before the break, I was asking you about the markets. How do you see the market reacting to the Finance Minister taking any steps, if at all, in the budget, in case the market expectations are not met? Do you see a further slide in the markets? Do you see that happening at all?
Whenever the market expectations are not met, the slide happens. But that's not the main point. I don't know if the finance minister should be really playing to the markets in the first place. Now, he is the manager of the economy. Now, he should be looking at, again, like I said earlier, the longer term picture. And budget, I think, is only one element in the government's armory of policy actions, and it's a mere announcement. Now, it's a different thing that in India a lot of policy announcements are made in the budget, but essentially the budget is only a balancing of the accounts. Revenue expenditure is nothing more than that. But will the government do it? Will the government give a clear policy direction? Will it say whether it is this is how the government is going to behave as far as policy is concerned? Will there be any certainty regarding policies? These are the things which would probably be more important, and even the markets, I think, would accept it.
And right now, it's anybody's guess what's going to happen.
Anybody's guess.
Kamta Prasad, Dr. Kamta Prasad, asking you this. You talked about the rate cycle in the beginning of the show as well. Everyone, including India Inc., the industry, is expecting a rate cut sometime, maybe around the budget, maybe post-budget. The governor of the RBI played a deft stroke recently when he cut CRR for the second time in less than 40 days. Do you see the main policy rates, the reverse repo and the repo, being touched at all? Do you see a rate cut in the offing?
I expect so, because you know very well that inflation had little eased out a little bit. So the pressure that was there earlier is no longer there. On the other, forces which plead for reduction is there quite politically quite strong, articulate. They have the media with them, and so one can expect some rate cut. In fact, the reduction the CR reserve ratio was a pointer to that, this may happen. But I think if we are talking about this long-term growth rate, then budget has a very peripheral effect on that. Let's say that. There's too much halla-gulla about budget, which is not that important. We are talking about ebbs and flow or the basic structure. That is important. The little thing that we are mentioning, the FDI, retail trade, etc., what impact this have on the growth rate? Not much. Growth is determined main by the rate of saving, rate of investment, the growth of agriculture, infrastructure, transportation, railways, efficiency, governance. These are the real factors.
But people would argue, Dr. Prasad, people would argue that, and they have argued, especially the industry, that unless we get FIIs back to the country, growth will suffer. We'll come back to that in a bit. Anjan Roy, staying on the rate cut, going slightly aside from the budget right now, India expects some sort of policy rate cut. Do you see that happening, first of all? And if yes, when? And do you think the governor of the RBI played a master stroke and put the ball firmly back in the finance minister's court, saying, look, I've cut CRR now for the second time. You must take some measures so that we have some more scope, some more growth, some more room to boost growth. Do you think that was a master stroke?
Yeah, I suppose if you are cutting the CRR, then the logical next step should be a cut in the rates, interest rates, policy rates. Otherwise, where do you lead it to? And this is necessary because that can play a very critical role in boosting confidence, investor confidence, investment cycle can restart once again. So I suppose it can happen, and it can happen as early as day after, I mean, when the monetary policy review is announced.
Right. Absolutely. Dinesh, coming to you, the finance minister has an enormous task ahead of him, obviously. We already talked about how he has to walk a political tightrope, a budget tightrope, so to say. Let's talk about this fiscal deficit as well. It's something that has been on the finance minister's mind. He's been losing sleep, as he said, on record, over subsidies and the subsidy burden. How important is it? Of course, it's very important, everyone knows that, for him to rein in the fiscal deficit. But what real options does he really have, given his political compulsions, to cut government expenditure and rein in the fiscal deficit? Does he have any real options, so to say?
Oh, he does have options. I mean, in fact, the last budget itself, he had said that fiscal consolidation is a priority. He had said that the government would do something about it. It will bring in an amendment to the FRBM Act. He had talked about fiscal responsibility for the states. And none of this have gone ahead. In fact, the Finance Commission's roadmap has not been followed. So, and this the Rangarajan committee has also pointed out, the review of the economy by the PMESC has pointed out. But unfortunately, none of that has happened. Now, whether he has options, of course there are options. Now, there are tough options. Whether we'll exercise or not is a million-dollar question.
Do you see him biting the bullet on say, subsidies, say like petroleum subsidies and LPG and kerosene?
Given the kind of political environment we are in right now, it looks a little tough. But then he can always, throw the gauntlet down and say, ask the others to bite the bullet rather.
Right. Do you agree with that, Dr. Kamdar Prasad?
No, I don't agree that finance minister has many options. His options are very limited because budget is essentially, let us see, an instrument of a political party. It has a political orientation. And given the political circumstances right now, in view of the elections in UP and so on, I don't think that the finance minister will be in a position to adopt a very tough line. And given the type of pressure that are going on, subsidies is the main thing that we can say that, well, right. The villain of the piece.
I think the subsidy burden is, the bill is going to cross 94,000 crore if I'm not wrong.
Subsidy is the major thing. And on the one, the subsidies are increasing. On the other hand, they clamour that, well, provide this group also under this subsidy group, provide that group also, make PDS universal and so on. All such pressures are going on.
Right.
And how can a finance minister, you see, given the political situation in which he is working, afford to take in tough measures right now, subsidy? If subsidies are cut, many of the problems are solved.
Right.
Because then with the capital formation by the public sector, capital formation boosts up investment, boosts up infrastructure, raises the growth rate. All these things are not happening.
Right, right.
Because of the limited options the finance.
Right. Fair point. We'll take another break right now, gentlemen, and we'll come back and we'll discuss the other most important part of the budget, that's taxation, direct taxes and indirect taxes. Stay with us, don't go anywhere. Taxation still to come up on The Big Picture. We'll be right back. Welcome back to The Big Picture. We're discussing the options the finance minister has in front of him, considering the budget is almost upon us. Dinesh, coming to you now. The council, the PMESC, had suggested that the government raise excises and duties to pre-2008 levels. They had cut that to support growth and support consumption. Do you see that happening at all?
They had done it at that point of time as a fiscal stimulus to the economy. But I don't know if they have the option right now, because the industry is already clamoring for lower interest rates. Obviously, they would be very unhappy with higher excise. But that's practically the only option the finance minister has. He has to raise excise duties. There is no other way out for him.
And that would be a good idea, Mr. Roy. My figures tell me that if the government raises the indirect tax rates to 12%, at least 35,000 crore tax revenue would come into the government kitty. Isn't that a good idea, economically speaking, purely?
Not at all, in the sense that you can raise taxes and you can garner any amount of money, but whether it can be sustained. For example, yesterday the IIP figures were released. It shows that, that excepting for a very tiny segment of industrial economy, everything is contracting. Now, in that kind of a situation, if you raise excise duty, it will further act as a dampener. And the question is, do you want to act as a dampener at this point of time? You are hoping for around 7% growth rate. Now, an excise duty hike at this point of time will possibly be a block towards achieving that objective. Right. And growth is important not just for the sake of it, but see, we have this huge backlog of unemployment, and we have seen that unemployment rate has gone down very fast during high growth period. Anti-poverty programs have been taken up, but the best sustainable anti-poverty program was faster growth, because then it percolates down, and we have seen that the poverty ratio has declined fastest during the period of fast growth. So keeping all these broad objectives in mind, to raise excise duty now would be rather counterproductive. What has been emphasized that subsidy cut is a subsidy fine-tuning of subsidies is a much better option, but that will of course call for.
So obviously you're saying subsidies in itself, they're not a bad thing unless they're implemented properly, in which case they could.
No, there are some subsidies which are bad.
Type of subsidy, you see.
Which are bad. For example, what is the point of keeping petroleum prices artificially low? We are importing 80% of our petroleum. Our current account deficit is crossing $180 billion. It will be unsustainable. And here you are keeping petrol subsidies low, and so that car owners, they can get petrol at cheap prices.
Right. You had a point to make on subsidies as well.
No, subsidy, I was saying that it's a subsidy as such is neither good or bad. It depends on which type of subsidy. Merit subsidy are justified. Non-merit subsidy not justified.
How would you describe merit subsidies and non-merit?
No, merit subsidies are those, you see, which are posted to the deserving people, the poor people. If they get the subsidy, it's all right. But the petroleum subsidy, I think, is saying, it is not the poorer people, the richer class who is taking the advantage of the petroleum subsidy.
Right.
So, like that, several subsidies are like that.
Right.
The better of classes are taking advantage of that.
Right. Dinesh, I think I just saw it on my screen, a grab of Sushil Modi. That reminds me of the GST. It's a very important path-breaking tax reform, probably the legacy by which Pranab Mukherjee as a finance minister will be known if it passes through. GST as well as direct taxes code DTC has been in limbo for a while now, mainly due to lack of consensus between centre and the states. There has been some talk of some provisions of the DTC being incorporated in this year's budget. Now, but the complete bill obviously will take some more time. April 2013, I think, is the date for it. How important are these two reforms for the economy of the country, for the taxpayers of this country?
Very important. And one of the most important things, as I said earlier, that if the government were to give a direction, this would be the most important signal it would be giving. If it gives at least a roadmap for the GST and say that we are going to implement it by April 1, 2013, even if it is 1 year later, and DTC, it will be one of the clearest indication that the government is going to move ahead on some reforms, and it will remove a lot of structural issues from the economy. And the other issue which the government could do is that even if it doesn't move on a lot of big ticket reforms, it can do a lot on efficiency, creating more efficiencies in the system.
Right.
Which, for example, the power sector. I mean, recently the ICIC chairman KV Kamath wrote about it. He said that you don't need to do the big ticket reforms. You can do small things and increase efficiencies in many sectors. For example, energy sector, power sector. A lot of projects are stuck in the last mile. Now you could remove some of those bottlenecks and bring those power projects online, which would be a huge boost to investment as well as for the industry.
I think you've raised a very important point, Dinesh. Coming to Anjan Roy, thoughts on GST DTC?
Yeah, these are good things, but one has to see how well these can be. Once again, GST is stuck in political differences. Unless that is resolved, it will not be implemented. So government will have to be, the coalition will have to come to an understanding with the opposition, with its own partners, and introduce that.
Right.
Ultimately, it's the political will which will matter.
Right, absolutely. We have not too much time left, but I'd like to talk about inflation for a bit. Coming to you, sir, Dr. Prasad, the Dr. Rangarajan committee report that just came out, I think a couple of weeks back, was very positive in its outlook. And I think he said that by March, which is the ongoing month, it'll settle around 5 to 6%. Do you agree with Dr. Rangarajan's optimism? Do you think the inflation is going to come down to that level, or do you think it's going to stay higher than that?
Well, there are factors which have been indicating for about a month or two that, well, inflation is likely to come down because of the, number one, this agricultural production has been actually very high. There is a basic factor. I think in this discussion we are not touching agriculture, which is the basic to the whole economic system. Unless you tackle agriculture, irrigation, you will not be able to come to the grips with the fundamentals of the Indian economy and the growth rate and so on. Mere touching superficial matters, like this GST and C, are not going to help much in the process.
Right. Very briefly,
growth is very low because agriculture is low. Agriculture is low because irrigation is neglected in this country for decades.
Fair point, Dr. Prasad. I think you had a point to make, very briefly if you could.
No, very interesting point Dr. Prasad has made. For example, the eastern states have had a record agriculture production this year, over 100 million tons, and you don't have a market infrastructure there. I mean, farmers are not getting good prices. They're not even getting minimum support prices there. So how do you tackle these kind of issues? This is what I meant by increasing efficiencies.
That's interesting that you say that. Last word on the show will have to go to Anjan Roy. Anjan Roy, what are you expecting from this year's budget, and any surprises you foresee on March 16 that could surprise us all of us?
I mean, I'll be very surprised to get too many surprises. But I suppose, given the political scene, and now that election is not immediately around the corner, and if the UPA is reaching some understanding with the new powers in UP and elsewhere, maybe he will be able to introduce some reforms. That's about all.
Absolutely, absolutely. We must end the show on that note. Like the gentleman on the panel said today, some tough measures needed to take. Mr. Pranab Mukherjee has to take some tough measures in this budget, bite the bullet on some potentially unpopular decisions if he wants to revive growth, get investor confidence back. Thank you so much, all my guests, for joining us on the show today. That's all we have time for right now. We'll come back with another episode of The Big Picture next time. Thank you, goodbye, good night, and thanks for watching.